All right, so today is the day. It's the FOMC, which is coming out, and we'll see what effect that has on the market. We are expecting that this should drive the next major trending move. We've seen volatility really, really low, volume really low, price contracting into a super tight trading range, and the FOMC is most likely going to be the catalyst that drives the next major momentous move. So in today's show, we'll have a look at what that means for you in the short term, what that means for price action, where we're likely to go next, as well as what will happen to the altcoins. So smash the like button, hit the bell notification, and subscribe to the channel. Let's get straight into the show content. Of course, the stock market also in a precarious place, which is essentially affecting everything within crypto. So I do want to have a look at some of the stocks as well today, specifically NVIDIA, which is about to put in a death cross between the 50 and 200 moving average, which will also have an effect on the market since they hold such a massive weighting, right? So if you have a look over here, Wednesday, of course, these are the events coming out later on today. Mark it off on your calendar, depending on where you are in the world. It should give you the relevant time frame. It's usually somewhere around midday in the US. Now, currently, the expectation is that they're not going to do anything. There's a 99% probability that they're going to keep the interest rates at exactly the same level, meaning they're not going to be cutting at all, right? I think what the market's more looking towards is what Jerome Powell is going to actually say in the meeting. The FOMC statement is the most important thing that they're going to be focusing on, because that's where it gives that forward guidance as to what may come next, right? Is this speech going to be dovish, meaning kind in tone, not too harsh on the market, or is his speech going to be hawkish, where he's once again going to come in very, very aggressive? So I don't believe that the FOMC interest rate decision, when it comes out, is going to be the actual driver of the market, but it's more going to be the FOMC press conference. When the press conference comes up, which is about 30 minutes after the statement, that's where you are going to see his tonality, and that's literally what's going to drive the next move. Also, you can look into the statement, which is also released just before that, 30 minutes earlier, and if you see a change in their speech where they say that they're going to maintain, this has been a recurring theme, they're going to maintain tight monetary policy. They have a target inflation rate of 2%, and they don't see any reason in changing that. Well, if they change that terminology and you start to see they insinuate something along the lines of they're stopping quantitative tightening and potentially moving into quantitative easing, where they even suggest that in the next couple of months they might start to buy back assets, right? The Federal Reserve's total assets have been literally downtrending this entire time. The market still somehow managed to go up in that environment, but it's very, very difficult for risk on high risk assets, the far right side of the risk curve, such as altcoins. It's very difficult for those things to run when you continuously see the Federal Reserve's total assets declining. So if you look over here, I mean, there has been a slight increase over there. You went from 6.75 trillion now to 6.76 trillion. So it's 0.01 trillion up on the total asset. So we'll see, maybe, just maybe, there will be some sort of change in terms of what they suggest in that FOMC statement. Now, the stock market's still struggling at these key levels. You did have yesterday coming directly into the 200-day moving average on the S&P 500 as a rejective candle. There's going to be a whole lot of resistance as well within this zone over here. You can see it pretty clearly. This is going to be a major resistance coming into this area, and that's exactly where price has currently rejected. So therefore, keep a close eye out on this region over here. If you can start to break back above, that would be the equivalent of, I guess, Bitcoin breaking back above $90,000 and reclaiming some of its trading range. QQQ looks no different as well, also rejecting from that key level. Let's have a look at NVIDIA. Also, NVIDIA coming into the 200, starting to reject off of that. The question always is, did you gain a level or lose a level? So pay attention to NVIDIA as it is in this mid-range region. See if it can gain this level. If it can hold this level over here, there might be some opportunities. But at the end of the day, you do have the 50-day simple moving average about to cross. Inevitably, this death cross is going to take place. You're going to get a cross between the 50 and the 200 over here. You would need NVIDIA to trade all the way up to about 140 within a matter of the next couple of days, next 2 to 3 days, in order to avoid this death cross. So the death cross is probably going to take place. When the death cross takes place, oftentimes you'll have price suck into that zone like a magnet, and that they call the kiss of death, where many people will actually exit their positions in that zone, right? And that's why I think we really need to pay attention to the stock market, since it has broken structure and it's putting in those lower lows and lower highs, right? So, Mark Morris says over there, right, everything points to more pain. Absolutely. You can't have the gain without the pain. Remember, the volatility in the market is what allows us to make outsized returns and life-changing wealth, right? Because essentially it gives you the opportunity to buy low and sell high, right? We want these wild swings. It's actually really good for us as traders, right? As long-term investors, probably not a great thing, but for traders, it is. Okay, 24-hour volume as anticipated, as we spoke about yesterday, exactly as expected. It's going even lower, right? Because we would expect that people are going to go risk off leading into the FOMC, and then we'll see what do they do next. Do we pump into FOMC or not? I'd actually love to see your votes over here. Make sure you vote on the poll section. Will price pump or dump into the FOMC? I've given a couple of options over there. Pump and then dump afterwards, pump into and then we'll keep pumping, or we're going to dump into the FOMC and then pump afterwards, or we're going to dump into the FOMC and then keep dumping. The majority of you have voted 39% say pump into the FOMC and then dump afterwards. That is probably the most likely outcome, to tell the truth. I clicked that one as well, but let's see. Only time will tell, right? So low volume over here means for very, very easy manipulated moves. High volatility is inevitable. It is going to be coming today. Right now, the majority of liquidations have been on the long side. We'll look at our short trade, which we had yesterday, which has been playing out. Daily exchange volume continues to grind ever lower, right? Lower and lower and lower, now creating new lows over there. Eventually, it will bounce, and that's where you should get a bit of a move. Now, this is interesting. This chart, this is the USDT dominance. You are getting a cross again over here between the 9 and 18 exponential, and the USDT dominance does look like it wants to roll over here. But if you turn it onto a line chart, that will also help you to identify the higher lows and higher highs, and we can simply just turn off those moving averages to make it nice and clear over there. And you can see this is a series of high highs and high lows, right? So this is just choppy behavior over here. In order to break this down, you really need to see the USDT dominance get below 4.89. For anyone new here, why do we look at this? We look at this because when this chart goes towards the upside, it puts immense pressure on the crypto market, altcoins, Bitcoin, etc. And if this chart is going down, that's usually where we see beautiful, amazing rallies like we saw from here all the way September into December. We had that really, really nice run over the course of November. Everything was pumping. That's what that looked like, right? So when it's grinding towards the upside, it means a very difficult environment for crypto. So when we put those moving averages on, the fact that they're starting to cross is interesting, right? If this can start to roll over, that would bring some much needed relief. And what's interesting about that is we looked at this yesterday. The total cryptocurrency market cap is theoretically at the key support, which is targeting for Bitcoin. If we look at total 2, if that will just reload, let's give that a second over there. 1 second, guys. Let's see total 2 over here. Okay, let's grab that over there. Where is our list? Apologies for the delay. There we go. Let's go to total 2. Total 2 has already lost some of those key levels, but it hasn't broken below the so-called dead zone, right? Dead zone is if it takes out 862 billion. Total 2 refer to the total cryptocurrency market cap minus Bitcoin. The reason that it's interesting is because if this does roll over, new money would be flowing into the crypto market, but Bitcoin still hasn't hit the key levels that we're looking at, but total 1 and 2 theoretically has. So what that could mean is, well, what if Bitcoin dominance did actually have to break down over here, right? You can see it's also grinding into this trend line. Eventually, this will start to break. It's too soon to tell, but I think it's something interesting to look forward to. The reason that we mention all of this is because it's all going to depend on what the Fed does, right? If the Fed are actually buying back assets and they cut quantitative tightening, then that's typically the environment where you see the altcoins run. So it's a bit of a far out thing to look at for now, but I think it's worthwhile mentioning, at least for the time being. The other thing we've been looking at is the RSI in the weekly time frame, which is still holding that 44 region. This is where your major bounces did occur previously and you had some reaccumulation. Now, I don't think that this is anything that you need to rush into. I think remain patient, right? Continue to remain patient. We've been focused on this chart for a while, and we said really there's only two zones where you need to make a decision to get into the market. One is going to be over here where we got our white arrow, and the other one is the next white arrow, which is a break back above the breakdown level. So if this RSI is going to hold over there, then we would expect that price should eventually grind up, pushing above $94,000, and that becomes your trigger, your entry into the market. Remember, the reason why we wait patiently for one of those levels to get hit is because we want to reduce the risk as much as possible. If you look over here, this is your percentage gain required to recover a loss, right? I teach this in Whale School. Remember, Whale School is the free trading course. You don't have to pay $2,000. If you do, use the link in the description below. You can click that over there. You can sign up to Bybit. They are actually currently running a trading competition, by the way, where you can win up to $1 million, right? $1 million is the current prize pool. That is the Legends of Trade VIP arena. Join, use that user ID, sign up into Whale School. It accesses you into all the crypto schools. Now, back to the percentage gain required to recover a loss, right? With the volatility that we could experience, you could easily see another 15% move. If you take the trade incorrectly and you lose 15% of your account, it means that you would need 17.6% just to get back to break even. Now, some people are trading on leverage, which means in 1 second, they could lose 50% of their account. Remember, 50% loss means that you need to gain 100% just to get back to break even. And as those losses become more and more exponential, and you're talking about the region of 90 to 95% loss, look at the difference between 90 and 95. It's only a 5% difference, but your gain required to get back those losses is not 900%, but 1,900%, 1,000% difference for a 5% difference in losses. The losses become exponential, right? Meaning the gains become exponential to get back, right? It becomes very difficult. So if you do want to learn more about that, guys, 12 days left to go. Jump into Whale School. Use the link in the description below. Sign up first to Bybit. Go to Bybit over here. Click that link, sign up. Make a $100 deposit. Claim your sign-up bonus as well. They have up to $30,000. And then you can come over here, put in your email address, and they'll use that user ID, and that's how you get in for free. Unlock full access for free. So be careful, right? That is the reason that we're waiting for confirmations, and we're not trying to pick the bottoms over here. This chart is still bearish despite the little bit of green that we're experiencing. 5, 10, 15, 20. We're working on the 25th day of closing below the trading range. Now, remember, this is a breakdown from a trading range, market's range and market's trend, right? If the market was in reaccumulation, you would have expected that price should have held this level. If the price broke down this level, there is a chance that for the first time within the cycle, we're going through distribution. And if you go through distribution means that smart money and at least those who control the market, whales, etc., could be selling, right? So if we look over here, this is your 4 essential market phases. I also go into quite a lot of detail in Whale School teaching this. So if you do want to learn more about it, please do join. Everything is explained over there. Remember, the market goes through accumulation, right? The market bottoms, early adopters buy in, the 200 moving average flattens out, price reclaims it, and then you advance, you move into a markup phase. Now you can oscillate between phase 1 and 2 over and over again, right? So you go from phase 1, you accumulate, you go into an advancement, and then this point over here can essentially be reaccumulation. You reaccumulate, and then you mark up. Now we've seen that, right? Over and over again, we saw those different phases. You can see over here, reaccumulation, markup phase, reaccumulation, markup phase, reaccumulation, markup phase. Then you would have expected reaccumulation to hold this range over here and then mark up again. Now, for the first time, we may actually be seeing distribution, right? The market begins to move lower and it forms a downtrend. Yes, have we seen that? Of course, we have seen that, right? And prices below the 200-day moving average, right? If we look over here, price is now below the 200-day moving average, meaning it could be a markdown phase. It hasn't turned down yet, the 200 moving average, right? Now, the most likely outcome and my expectation over here, what I would prefer to see is a triple bullish divergence form, right? or I would like to see this bullish divergence negated. If you see over here, the RSI trending up, price was trending down. We started to play out that move. Personally, I would prefer to see a rejection from here. One more sweep down. I would like to see this RSI broken towards the downside, the trend line, but still form a higher low somewhere in this lower region while price makes yet again another lower low in the $72,000 zone. Then I think that becomes a great opportunity to get into the market. So that's what we're looking at over there. The 12-hour is showing potential for a bounce. If this does happen, that would be a short squeeze. Why? Well, you swept Monday low. You then reclaim Monday low in the form of a swing failure pattern. So if you are focusing on the Monday trading range on the 12-hour time frame, you can see that beautiful swing failure pattern back into the trading range. This suggests that at the least you could move up in the short term, right? This would be the equivalent of, let's go back to our poll. This would be the equivalent of pump into the FOMC and then possibly dump after the FOMC, right? So pump into the FOMC, possibly profit taking into the Monday high, $84,000 at an extreme. Maybe you push all the way up. This would be really, really extreme into the previous month's mid. That would be $90,000. I definitely wouldn't expect that as a base case. That's 1.84%, and that would be a massive candle of 8.6%, entirely dependent on Jerome Powell's speech, right? So a little bit of guessing when it comes to what could potentially happen next. What we can say with more confidence is the high time frame trends, and those are down, right? So can you get bounces? Absolutely, but those are down. All right, so we've covered that. This is the short trade. I did update the whale room audience on the short trade yesterday, suggesting that if you do want to take 25% profit off the table, it does make sense, right? And we've eliminated all risk. This is a free trade. We cannot lose. It's impossible because we've moved our stops into break even, and we've already taken 25% off the trade. For the rest of the people, you are welcome to leave the remainder of this trade. If you took this trade with us, you can leave the remainder for the end, or you can leave it into potential for a swing trade, right? So right now, what do we have over here? We have the bearish pennant, right? There it is, bearish pennant, price coming down, consolidating into a wedge, multiple candle closes on the 4-hour time frame. Outside of that, confirming the breakdown, you're back testing that level over there, which is the original entry and breakdown level. So you could see this roll over once again. So short term, on the hourly, you can see the funding favors the bears because the funding is positive. Open interest is pretty low over here. We usually, you would see the open interest building with longs opening up trades over here. So a little bit of a divergence taking place, but positive funding, right? Positive funding in the short term favors the bears. Negative funding in the short term favors the bulls, right? Because it goes negative and then you expect it to oscillate. Price then moves up. So keep an eye in the short term for this. Let's go a little bit lower time frame, like the 10-minute. Okay, 10 minutes, you can see already starting to roll over. So in the short term, you might see a little bit of a pullback over here in the next couple of hours or so. All right, ETH BTC all the way back down to these low levels. I think we do need to wait for the monthly because you also have a chance for a swing failure pattern on the monthly, right? Coming into key support. This is super, super key support on the monthly. So it's going to be interesting, right? This is also the quarterly close. Let's actually have a look at what the quarterly looks like on ETH BTC. So there it is. If you got a strong reaction out of here and a bit of a swing failure before the end of the month, that could be a strong sign that things will look a little bit more optimistic leading into the next month. So maybe these last couple of days, the worst will be over, right? The next 10 or 11 days or so, we'll have to pay attention. That's one of the reasons we are trading on the bots over here. You can see the ETH bot is already starting to pick up momentum on our Pinex bots. The link's in the description, 2.5% up over there. You can copy them if you use the link below. Okay, also, World Mobile Token, coming into key support over here. You do have a bit of a falling wedge. So we can have a look at some of these altcoins and see how they're looking over here. Let's see. Solana still holding that range low level, but you have hit into it many, many, many different times. If BTC takes the dump, this will drop it anywhere between $90 and $100. And I do think for a short-term trade, there's an opportunity over there. Okay, Sui still grinding down. Attempting to hold that. I would wait for it to break this trend line before getting too excited. Hype, we gave the potential for the long trade setup over there. You are in profit on this trade, so you can eliminate the risk now. Stops to break even over there. we said, a possible move into the mid-range at about 16 or possibly up to about 18 is still a possibility over there. All right. Mantra, yesterday we identified as one of the strong ones on the BTC pair. You have broken this trend line, right? So now I guess you can be on high-low watch in the short term. This is already creating lower highs, but maybe you can put in a high-low after the break of this trend line over here. So let's have a look on the 4-hour. Let's just see if there's anything that lines up over here on the H4. Okay, it's been a pretty substantial move. I would be looking at the 50% level over there. So I guess keep an eye out around that 646. Okay, we can have a look at Ondo. So let's go back onto the daily though. Ondo is still grinding down, right? Losing this key level over here. That's essentially back tested this as resistance. Price support now tested as resistance, which is not a good sign, and starting to make its way towards the downside. So if you do want to learn more about these things, guys, by the way, again, join Whale School. These are the lessons, right? This is essentially what we cover. I add new alpha in every single one of the workshops. That's actually where the true value lies, but you need to join the school to get into the workshops. Remember, if you do sign up using this link below to Bybit and you join into Whale School, which is currently going to save you $2,000 by joining now. This also accesses you into any of the courses, right? There's a whole lot of new courses that are coming up from other KOLs all around the world. All right, quickly going back over here. I just wanted to showcase for Ondo, if BTC does get that sweep down, you'll probably be looking at a move that might break this trend line. I'd be looking at about 60 cents for an opportunity to hold that range low. It looks similar to Ethereum in many ways, this chart. Okay, render, 𝗬𝗡𝗡. Sure, let's have a look at 𝗬𝗡𝗡. How's 𝗬𝗡𝗡 doing? 𝗬𝗡𝗡 USDT. Okay, 𝗬𝗡𝗡. Let me know in the comments what else you want to have a look at. Please, guys, also smash the like button. It really helps to get the show content out there. Okay, 𝗬𝗡𝗡𝗡 has been absolutely annihilated. Personally, I wouldn't touch 𝗬𝗡𝗡𝗡 unless it started to break some key levels. Really, the level that it needs to get back above is going to be this zone over here. You can round it up to $11. You'll get some signs of life if it breaks back above this breakdown level. This is similar to where Trump made those tweets and Bitcoin pumped up and got that trap. Those are the candles you need to get back above. That's $9. $9, watch for pullbacks if you want a tight entry, but the real thing, the real change occurs if you break back above 11. Okay, Pepe, I saw in the comments someone said it's like International Frog Day or something. So we can see if that looks true on the Pepe chart. I mean, not really. Pepe is still in a strong downtrend, calling for at least a sweep of these lows, right? So you are getting close to potentially an end, right? But on a meme coin, this can be brutal. That can still be another 50% down. So I guess keep an eye out on this, similar to what I just showed on 𝗬𝗡𝗡𝗡. That was the BTC breakdown level. You need to see this get above 893, right? 893 was the breakdown level. So expect a rejection from there. And if you sweep this low and then reclaim, right, deviate back into the trading range, then maybe on Pepe it will look okay. Okay, Casper, sure. Caspian with a Casper logo as your profile wants Casper. Are you sure you want Casper though? Are you sure? That is the question. Because it does look brutal, right? It still looks brutal, but let's see. Let's have a look, a realistic look over here. Let's clean some of this up. Okay. Look, it has swept these levels. The main key structure that I would be focused on, like if I were to get long on this, I'd rather want to see it reclaim much higher, 1147. Otherwise, alternatively, I'd want to see a deeper correction into this zone. I think this will be very strong demand. So again, similar to the rest of the things, you might still get one more sweep down. You might, if it rejects over here, you might see that one more sweep down. But for many people, this is still quite a serious drawdown, right? I mean, that's 40%. That could still be 40% from current levels and default back to this, right? Let's say you enter with fresh liquidity now, 40% means you need 66.7% pump just to get back to your break-even point. So these are the risks, right? Don't fight the trends. The trends are down. There is no debating it, guys. This is the hard facts and evidence. This is a downtrend, right? You can see over here, lower lows and lower highs, lower lows and lower highs. So you expect somewhere around here, anywhere within this box, another lower high to form. And then you expect it to move into a lower low. So I don't think there's any rush. No rush when it comes to the altcoins. It's either you break structure, create higher highs, then you buy the next pullback, which is probably going to be at a similar place to where current prices are. So where the X is, pretty similar place. Or B, so that's A, you buy there, higher, wait for the break of structure, probably enter at the same place. Or B, you attempt to buy lower while price is still in a downtrend, but at least you're buying into key support. So you have a higher probability that you're going to get a bounce. All right, does that make sense? Again, for any confusion out there, guys, make sure that you jump into Whale Room. Make sure you jump into Whale School as well. So Whale Room and Whale School. Whale Room is the private Discord. Whale School is the free trading course. And that's it from me, guys. I'll see you all on the next one. I do have a show tomorrow, but not on Friday. So I'll see you all tomorrow. We will have the result from the FOMC, and then we can see where things are next, how things have changed following the next 24 hours. So I'll catch you on the next one. Have a great day, and cheers for now.